Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guy podcast, and today is a little bit more of a market update, a little bit of a PSA of what's going on out there. And then the following week, we're going to be talking about a little bit of mortgage fraud going on and why, and what might be causing it. So, announcement, Flagstar. So this is more of a PSA for anybody out there that has a loan right now, and your loan servicer might be Flagstar. They are currently struggling a little bit and decided, since they got their butts saved and stayed in business and they got saved by their investors earlier this year, they're shedding 1,900 workers. So I think some of those people are going to get picked up by Mr. Cooper, which is a plus for those employees. But why is because Flagstar is going to be selling its mortgage servicing business or their servicing platform over to Mr. Cooper. And yes, Mr. Cooper is legitimate. I actually got a call the other day from a real estate agent, had a pre-approval letter from Mr. Cooper. And he's like, is this a real thing? And I remember years ago, it was probably, 8 or 9 years ago. I think they're a big Texas company. And I had pulled someone's credit, and I saw the servicer said, Mr. Cooper. I called BS. I'm like, I don't know who the hell this place is. I thought it was actually like a personal loan, right? Like private financing, until I found out that they are actually massive. And they do a lot of loan servicing, and it's a pretty good company. So no fear. But if you are a Flagstar customer and that is your loan servicer currently, just a heads up, that's probably going to be happening here soon. You're going to get some transfer on your servicing rights. So keep your eyes out for that letter so you can set up your new payments with Mr. Cooper. Next thing here going on. So this time of year has been a little weird. We're in October, and we're coming up on the election. And it gets a little odd this time of year. People over the last 18 months have been buying like crazy still, even when the rates were in the mid and upper sevens. And there's always something about the month before an election year, everything starts to kind of quiet down a little bit out of fear or happiness, joy of who might be elected. No one knows. So we have a little bit of stats on that. But related to the concerns in the market and the slowing down in the month of October and everything I'm sure will loosen up and go crazy in November, regardless of who gets elected, is the Mortgage Bankers Association as a national association. Again, I am the vice president of the Ohio Mortgage Bankers Association. But we have something called the Mortgage Credit Availability Index, the MCAI. And the whole purpose of this, it was indexed at 100, right? Keep it a flat 100. And it's basically to review information about the loan process, servicing, underwriting guidelines, and standards, and what's going on in the market. Applications versus approvals, what's happening. The index declined 1.5% to a 98.5. What does this mean? So if there's a decrease in the index, that means that credit is starting to tighten up a little bit, right? What do we mean by tighten up? I don't know. The easiest way to explain it is, let's talk about automated findings, right? Like AUS and DU and DO and all this fun stuff. So if I take your file, because you might have heard us talk about automated approvals or manual underwriting, okay? So let's remember that concept. So if let's say I go through AUS and we're uploading findings for FHA approved eligible is what we're hoping for here. They're kind of tweaking stuff. Fannie Mae's doing it, Freddie Mac's doing it, FHA's doing it, USDA's doing it. They're all doing it, okay? And what I mean is there's stuff back there where they would typically accept a specific risk criteria or a credit score or a certain amount of reserves. Now it's starting to tighten a little bit, and we're starting to see some different findings, right? A good example would be, 5-6 years ago, if you had a 640 with a couple months of reserves for USDA, you were slam dunk. Automated approval, AE, good to go. And a couple years ago, they changed it to a 680. Okay, got a 680, doesn't matter about the rest of the file, approved eligible, ready to rock. Now, we're very lucky to get an approved eligible with USDA with a 680 score. I'm seeing people in the low 700s, but if they don't have reserves, it's kind of kicking them out, and they're still like manual underwriting, refer eligible. And it's a little concerning. So because we can't tell what they're tweaking or changing. We get it based off of like a trial and error. I get a file, I'm expecting an approved eligible, we run it. It's not. It's a manual. It's a refer eligible, whatever it is. So that's what the tightening is referring to. And some of the notes on here, the conventional MCAI decreased 1.7%, and the government increased by 0.8%. So it's pretty crazy. So some stuff is tightening up. So files are getting a little bit more challenging to deal with, to say the least. So if you're a loan officer out there or you're a realtor and you're like, I don't understand, why are you guys asking for this? Well, sometimes that's what happens. There's some tightening in the credit criteria, and sometimes you got to document a little bit more. So let's go related to the market. So the two things I want to talk about the election here. So a little announcement here is the home seller profit margins dropped in the third quarter. So you buyers are I don't think it's going to help push anybody into the market. Homeowners earned a 55.6% profit margin on a typical single family or condo in the sale in the U.S. in the third quarter. 55.6%. So that's a sales tactic to let you know that you should buy and not rent, right? I mean, 55.6% was their profit margin when they sold their home in the third quarter of 2024. But that is down from its peak. The peak hit in 2022, and it was 64% profit margin. That is crazy. But some commentary here from the U.S. Home Sales Report. The latest price and profit numbers provided another round of generally good news for homeowners. Tempered by a bit of downside, home values remained at or near record levels, like I've talked about, supply and demand issues, right? Our values haven't really moved much. Around large swaths of the country, keeping seller profits far above historical levels. And at the same time, though the housing market settled down after a big second quarter, which extended a slow fallback in profit margins for sellers. So, related to that, right, how I've been talking about, it's a weird month. October is right before that. And so some of the reason that some of those profit margins might have decreased a little bit is because some of the first-time home buyers are starting to pump the brakes a little bit, okay? And we usually, again, like I said, we usually see it once school starts. You get into September, it starts to slowly kind of slow down, right? And then October is really weird because they're waiting for the presidential election. First-time home buyers delayed by election. Here's some statistics on this. So feel free to chime in, comment. Let me know what your thoughts are. 23% of buyers who are likely to purchase their first home in the next 12 months said they're waiting until after the election. That's according to Redfin's latest survey of 1,800 U.S. homeowners and renters aged 18 to 65. That is a small sample size, okay? But nonetheless, here's more data from their survey. 26.1% said they are waiting to see if the Harris Housing Affordability Plan goes into effect. Comment, please. Let me know your thoughts on the Harris plan with the $25,000 to first-time home buyers that we are all going to pay for. Again, I'm not going to get political in here, but I don't think that's a good idea. 15.9% are waiting to see if the Trump Housing Affordability Plan is enacted. 18.3% are waiting for the Fed to cut rates a little bit more in 2025. And the election is actually the third most common reason buyers are hesitating, behind saving for a home, that's 30%, and waiting for the right timing, 29%, which you can kind of take that 29% out of there. The right timing thing is related to the rate cuts, and that could be related to the election anyways, so take that out. So I would say the election is second most common reason. So what are your thoughts on that, guys? So we have Harris's plan who's going to try to invest a ton of money into the first-time home buyer market, $25,000. I'm not real sure what they're going to be using all that money for. I mean, good Lord. $25,000 can take you a long way, considering the fact that you've got USDA out there with no money down. You've got FHA with 3.5% down. Okay, so even if you're out there buying a $400,000 home, I mean, that's what, $14,000 down payment. What are you doing with the other 11? I mean, that'll definitely cover your closing costs with discount points. But there's so many other options out there: down payment assistance, USDA, FHA. You got 3% down, home ready, home possible with conventional financing. There's a lot of good things out there. My concern with that plan is it's going to cause even more inflation if we were going to spend that kind of money and inject it into the housing market, because it's not going to fix the housing supply issue. By injecting money to first-time home buyers, we're going to push up the amount of demand for said product. And if our supply does not follow, everybody's going to go up in regards to house prices are going to go up. Demand, right, for it's going up. Supply stays the same. We've got bigger problems. So I'm concerned about that. I'm not overly familiar with Trump's housing affordability plan, other than they talked about doing whatever they can to cut rates. That's what I recall. I mean, correct me if I'm wrong. Please do comment, enlighten me a little bit here, and feel free to comment. Again, I don't want to go overly political, but feel free to let me know your thoughts on Harris and Trump in regards to their home affordability plans and what you think it'll do to the market. So I'm concerned. It doesn't matter. And it doesn't matter who gets elected. We still got to deal with it, right? We're going to work through any kind of problems that get thrown our way or whatever's going on to the economy. So that's just a little market update, guys. Hopefully that was helpful and gives you something to think about. Feel free to comment. Remember, subscribe on YouTube. Check us out on Apple Podcasts and Spotify. And we'll catch you all next week with another update.